Hi everyone, welcome back to the Market Chat. My name is Richard Moglen. Joining us today is Sara Sabatino, also known as Sarah's Strat Sniper, who is a trader and educator using the hashtag the Strat methodology. Sarah, welcome back to the show. Great to have you.
So happy to be back. We got a lot of engagement from the last one, so I'm super excited to be here today and also be here at a time when I feel like it's a great learning time. The market, people are afraid, don't know what to do. So I'm excited to talk about, how we see it in the Strat eyes.
Yeah, perfect. And yeah, definitely been a choppy, volatile environment. And since you're more of a day trader, I think it suited your style perfectly. I'd love to go in depth into that. And in the previous interview, which will be linked down below in the description for everybody who hasn't seen it, we went into your background a little bit, kind of how you learned the strat. We won't go too much in detail in this video because we've already covered that. But to start things off, I'd love to just hear about the overall hashtag the strat methodology. How do you interpret price action? And I love to use the graphic that you've created as well to kind of go through all of that.
Cool. So the Strat methodology, it's solely based on price action. We trade what we see. We trade it when we see it. There's no guessing. We use lots of different principles. We use multiple time frame analysis. We use broadening formations. We use time frame continuity. So all of these things kind of come together to give us our trade setups. And Rob has simplified the strat into candle types, and that there's only 3 ways that any candle can trade from one to the next. So for those who haven't seen it yet, let me share my screen and show you the strat combo sheet. So what you have here is the strat combo sheet. Me and a friend of mine made this infographic, and it basically states there's only 3 candle types. Normal candlestick patterns have all different kinds of names, gravestone doji, hammer, butter, all these names. So instead of really learning all of those, there's only 3 things. You have an inside bar, which stays completely inside the previous candle, which we label that as a 1. Then you have 2s. And 2s, there are 2 different kinds of 2s because they are directional candles. You can have a 2 up, which means this candle broke the upside of the previous candle. So this would be considered a 2 up. Then you have a 2 down because this candle, this would be a live candle. So this live candle broke the downside of the previous candle. So that's a 2 down. Then you have 3s. 3s are outside bars, which means it takes out the top of the previous candle, fails one side, comes down, and also takes out the other side of the previous candle. So knowing that there's only 3 candle types, we know there's only a certain amount of ways that price can reverse or continue. So that is where this sheet comes into play. And this is how we trade the setups. So for example, if you have full time frame continuity to the upside, so meaning the majority of time frames are green, the month, the week, the day, the 60, if you see a setup like this, you're playing with the trend. So if you haven't gotten in yet, this can be any time frame as well. This could be a 60-minute time frame, a daily. The entries are still the same. So you would enter when this candle opens, say it opens right here, starts to come up, breaks the high of the previous candle, and then that's your target. So if you wanted to exit or exit partial, that's where we look to take profit. And this infographic is pretty rudimentary. So the risk reward here doesn't look so great, but we were working with, small little squares.
And I just want to emphasize for people, what Sarah said is really important. This can be any time frame, and I especially like to look for inside bar setups on a weekly time frame, which then I use to swing position trade on a daily time frame. So you often are looking for setups on a longer term time frame, and then are looking for entries on the lower term time frame. Is that right, Sarah?
Exactly. So if you so say this is your weekly setup, your weekly chart, the 212 up here, we might be looking for, a reversal on the daily to get
Right.
in early before we can trigger the weekly. So we're always looking to enter after corrective activity. My favorite setup for like the most high probability trade is a reversal on 2 time frames. So I might look for, this exact setup on a weekly. And then if I also have a daily setup that looks just like this, I'm taking it, because I know that if the daily triggers, it could potentially trigger the weekly participants as well. And you want to have as many, as many players at your back and buyers, the big money,
Yeah.
holding you up, and you want to catch that move. Also, too, this is great for stops, because if you were using the weekly time frame, your stop would be huge. But if you're using the daily time frame to trigger the setup, your stop is much smaller. So that is
Right.
how we also like mitigate our risk and have smaller stops, because of using multiple time frame analysis.
Exactly. And talk to me a little bit about what PMG stands for, the pivot machine gun, because for people who know kind of my style of trading and are familiar with it, we might call this a frozen rope, where you've got kind of a gradual increase. It looks almost linear, and then one bar takes everything down. So talk to me about how you use this setup and how you interpret it based on the strat methodology.
Yeah, it sounds basically the same thing.
Yeah.
So let's pretend that this is the pivot machine gun bullish. Let's pretend this is a daily time frame. So people tend to put stops at the tops of daily candles. And if you go down to a smaller time frame, so say you were looking at this chart on the daily, but then you went down to the hourly, these pivots highs on the daily are going to be higher your lower highs on the hourly.
Right.
So these, it all correlates. So the time frames all correlate and line up. And then once this gets triggered, so people have stops here. So the shorts will have stops at the highs of each candle. So once this setup triggers, bulls are getting in long, and then shorts have to buy to close. So that's adding to the buying pressure, which causes this mass just blow up of stops being triggered and natural buyers stepping in because the volatility is there.
Right. And something that you've kind of developed and thought up since the last video is your 50% rule. So I'd love to hear you talk about that and how you incorporate it into your method.
Yeah. So the 50% rule is a rule that I created just to put a rule on it to help with discipline. And it's been going really well. And if you are new to the strat and want to learn one setup, I would tell you to learn the 50% rule. The success rate of it has been outrageous. If I could go and show you my SPY chart, would that be cool, Richard?
Yeah, absolutely. Let's go
Okay,
for
I
that.
can't do a lot with this screen. So the 50% rule is for finding potential outside bars. And remember, outside bars take out the high and the low of the previous candle. SPY monthly is also in a pretty interesting time. We have never had this many outside months back to back. We've had 4 out of 5 were outside months. And if you know what outside bars are and that they exist, you would have noticed all of these moves. I called every single one of them with plenty of time to go, plenty of money to be gained to the downside or the long side. And even if you aren't a short-term or a short trader, if you don't like to go short, that's fine too. But at least you know where price is going to go and when to get in and when not to get in, not to buy the dip too early. Okay, so what the rule says, so a 3 starts as a 2 in one direction that fails and starts coming through the other range. So that is when, okay, let's zoom in real big on here. Actually, let's do this.
There we go.
Okay, so we're going to focus on the September candle. All right. So September opens, it opens up here, right there. We tick up, we take out August high by just a smidge. So the strength is not there anymore. It ticked up and then started falling back through. So once we have retraced, so there's two rules. You must take out one side of the previous candle, and then you must retrace at least 50% of the previous candle. And what that means is we expect price to come and take out the other side of this candle. So for instance, the 50% was at 444, and we were expecting it to at least take out 436, which it did. So, and then this is where multiple time frame analysis comes into play, because once you have your level, you want to look for strat reversals and actionable signals on a smaller time frame to get in on, and you still know your target. So let's go down to the daily and see what and where we could have gotten in at. So this is the August range. So September opened, ticked up. Actually, the actionable signal was right at the top. It failed immediately. It went 2 up and then just started puking. But then you can look for actionable signals. And if you know what outside bars are, and you know that now we're full time frame continuity red, because now the month goes red anytime we're below our opening. Mm-hmm. So we're full time frame continuity of the red. So you can look to enter on any strat actionable signal. And again, that goes back to the combo sheet. Let's get my magnet off. If you wanted, this was a failed 2, went 3. So a potential outside bar, you could have entered right here. Actually, no, wait, I'm getting ahead of myself. Full time frame continuity is happening up here, but we want to get you closer to the 50% rule. So the 50% is right in the middle. All right. You had a beautiful 2-1-2 reversal right at the 50. So you would go, when this candle opens here, this is a 2-1-2 reversal. You're going short here because we're at 50%. So we're thinking to ourselves, oh my gosh, SPY's going to go outside month. I want to get in. Where do I get in? You get in right here. Your stop goes at the high up here, and your target was here because that 436 makes it an outside month. And instead of having a huge stop like way up here, that would be ridiculous. Our stops should be no more than 1 candle.
How do you determine whether a setup is worth it for you to take based on where your stop can be and where your anticipated target is?
I just need 2 to 1 because that's what, so the other thing about the strat is we put ourselves in winning positions instantly. Like we know, my magnet's off. We know that this inside day was consolidation. It was right at the 50. So we know that as soon as this day opens and triggers that day's low, and it starts to go, it's already a winner. If you wanted to, you could put your stop at the high of the current day if you want. You can move your stop. I mean, and we do move our stops. Our stops are not worst case scenario stops. Like I would never tell somebody to leave your stop up here when price is already down here. I would tell them, move it to break even. You got in right there, move your stop here. You are now in a risk-free trade. You know exactly what your target is. And I remember this day, it hit our target. We had a pivot machine gun down on the hourly time frame, and the reversal was picture perfect. Like because we hit our target. So we were at exhaustion risk. So
Mm-hmm.
knowing when to sell and when to get out is everything. And I think I talked about this the last time, was that was what I was struggling with when I first started learning technical analysis is, where do I exit exactly? I never knew where to exit. And people would call this support. And what I had to do in my mind was change it from the word support to the word target. This is
Mm-hmm.
not support. Support always breaks, which is why we have broadening formations, because we'll always break through resistance and make a higher high. We'll always break through support and make a lower low. And that is our broadening formation. That's how that they come to be. And that's where smart money buys. They buy after the break. And I was always taught to bottom fish. So like say, we had one touch, two touch. I was taught to bottom fish right here and put my stop right here. But now that I know the strat, I know this is going to get taken out. So why would I want to get in before that?
Mm-hmm.
I'm getting in after that. After, all the stops get taken out, and then the smart money comes in and starts buying.
And you mentioned the term broadening formation. For people who aren't familiar already with that term, could you quickly define it and maybe give an example as well?
Yeah. A broadening formation is higher highs and lower lows, and it looks like, I maybe need to do it this way. It
Yeah.
looks like a megaphone. The pattern is expanding. And all that means is breakout and breakdown traders are getting wrecked because they're shorting at the lows and they're going long at the highs. Facebook was a great example. Like, let's not even, it still worked even all the way back here. We have a
Mm-hmm.
lower low here compared to this low, and then this low made a new low compared to that low. But we're not going to so focus on that part. We're going to focus on this part. And I like to tell people, if you can say this phrase, you have a low, a high, and then if you can say a new low, a new high, a new low, a new high, a new low, a new high, if you can keep saying that, that is a broadening formation. It doesn't have to be picture perfect. If a candle wick goes outside of it, whatever, the point is you made a new high compared to the previous high. Is it sustainable? In this case, no, never. It never was able to sustain itself. So if you are a breakout trader, let's say you're using this as your pivot high. Oh, we broke through. I'm going long. No, that was your target to exit your long. And then what happened? It fell for 3 days. Oh, new high. No, and same thing for the bottom. Anybody who went short against this pivot, it went down, played along the bottom of the broadening formation for a minute, and did what? It rocketed straight back up to new highs. So you never ever, in broadening formations, I've learned to explain to people, to technical analysis, because they ask me a lot, what's the difference between this and support and resistance? I say basically nothing, but to buy after the support break. To
Mm-hmm.
short after the resistance break. Buy support breaks, short resistance. But this is how that reflects in a chart. It reflects in a broadening formation.
Perfect. And Sarah, I know you want to talk about a little bit of the mental side of your training process and why it's so important to stay fluid and be able to flip your biases. And you want to talk about both Facebook and Tesla. So I'd love to hear your thoughts on that and why it's so important for you.
Yes. So Facebook was a great example this week of knowing when to buy the dip and knowing when not to buy the dip based on strat reversals and based on exhaustion risk. So these red lines on my chart came way back from June of 2020. So these were my downside targets. So I wanted to see these levels get hit before I even looked for a reversal just for a day trade, because I know we have full time frame continuity to the downside. So I'm only looking for a day trade. And people, people want to buy the dip on huge gap down days, but then you have to sit through $30 of more downside when you don't really have to.
Mm-hmm.
If you think about it logically, instead of trying to catch the falling knife, why don't you wait till you see price actually reverse? Because price cannot go higher until we break a previous day's high, right? Right. So wait for that to happen. People are like, oh, it's green here, I want to get long. Well, that's not a good enough signal. Then you open the next day, fall, open the next day, gap down. We want an actionable signal. So this is what is called a 2-2 reversal. So we had a 2 down, then we opened, broke that day's high, and got a 2 up. So this is a 2 down, 2 up reversal after taking out 2 exhaustion levels, meaning if you were short, you would have wanted to exit here or here. And then when you got this, you want to flip long. So on what day was that? 2/9, Wednesday. On Wednesday, for the first time ever, I was long bias. And when you're playing counter trend, you also want to get your levels from the smaller time frames. So I had alerts set. I said, hey, I'm getting in long here, and let's go to the hourly. Let's make green. Green is my targets. So knowing I'm counter trend, knowing that this is just a day trade, I'm going to the hourly time frame for my targets. Again, back to using multiple time frame analysis. So this was the trigger day. This was the Wednesday trade. So we open up, we break the previous day's high, we go sideways for 2 hours. Okay, but your pivot high was your first target, and then the next target was this candle's high. And then I told everybody, I said, this is my final target for the day, because I do not anticipate us to go up and take out this huge candle. That's a big feat,
Mm-hmm.
So that was the trade. So the entry was from 225 to 232. And you'll notice you have a 2-1-2 reversal right here when this candle opens. So using the daily time frame, you don't have to put your stop way down here. Use a strat setup. Okay, so you're entering there at 227. You're placing your stop at 224 for 232. So let's see. So you're risking 1.37%. I don't really use my risk reward tool on here. I probably should. To potentially make 2.4. And if you're using options, that's fine. And the strat is so great because you use it however you like to trade. So if you are a commons trader, trade commons. If you're an options trader, trade options. If you're trading SPY or you're a futures trader, trade futures. Trade whatever you're most comfortable with. I am just now getting into the futures game. I am in the wrong month to do it, but I've got to start somewhere. I really wish I would have opened it last month. So Wednesday, long bias. Today, I was short bias. Okay, why? Because we're still full-time frame continuity to the downside, and we still have another exhaustion target down here. So that was the setup today. It was go short at 226. Target 1 was 222. I also had a 220 psychological target, which would have been about there. And this was a successful trade. So Wednesday long, Thursday, I didn't do anything at all with it because this is a 2 up, 2 up. I do not play same direction candles. I only play reversals. It must be a 2 down and a 2 up, just like this, or a 2 up and then a 2 down. Never 2 down, 2 down, 2 down. I will miss all this if I'm not already in, because I don't play continuations. It's bad risk reward. Tesla this week was another good example of broadening formations, time frame continuity, switching bias. So let's go to the weekly time frame. So originally on Monday, I was long Tesla because we were at exhaustion. This is the weekly candle. We made a lower low compared to that low. We got an inside bar. So I know if price is going to reverse, it can only reverse in a certain amount of ways. I was looking for a 2-1-2 reversal to the upside. All right. So let's get rid of all this. So ideally, that's the trade. So I want to enter long at 943. I want to exit at 987. But going into the daily time frame, it triggered and failed. Mm-hmm. So even if you would have been long, like I'd love to go into that day.
That would have been what, Monday, right?
Yes, that was Monday. Because I actually had people go long on this on Monday. But my target one was here. This was the entry on a 3-1-2 up reversal. So the entry was there, the target was there, but then it failed. So had you taken profit there, good. If you didn't, you should know better if you're trading the strat. So that was the day. It triggered, it hit the target. And then on the very next candle, the flip, we talk about the flip, we talk about time, we talk about new candles. So from this candle to this candle, they were buying this whole first 30 minutes, the second 30 minutes, it sold off immediately. So also this setup is no longer enforced when you go below your daily trigger. So you would want to be protective. You would want to get out. Then the next day I said, oh, now we have a potential outside bar on the weekly, because we know threes happen when one side fails and then comes back and takes out the other side. So how you measure that, you get your fib. I have 0, 150. That's the only thing that I have marked, because I only use fibs to get the halfway point of my candle. So once, anytime we were below 902.88 on the daily, on the weekly, any time frame, using an actionable signal, you want to be short, with 862 being your target for that outside week. And that's what we got. We actually got it. This proper strat entry was, you had a 2 up. Again, it failed. It's a 2 up. It's red. Well, that's not the line I wanted. Okay, 2 up. Then the next day opened, you got a 2 down. So the best strat entry was right there at 920, and you would want to hold until 862 at least. And then there was a tiny little baby gap fill over here. But you got your outside week. So again, if you're going to learn any strat setup, I encourage you to learn the 50% rule. It would have, it could have helped you this week, this week, this week. And then real fast, let's talk about SPY on the monthly and why this is not the month to trying to be trader of the year. This is a giant candle that took out 4 months worth of price action. We are going to be stuck in this big candle for a while. Mm-hmm. So I said, I don't remember when, a couple weeks ago or a week ago, my perfect setup for March would be closing February as an inside month, which is most likely going to happen. And then in March, playing a 3-1-2 reversal. So let's pretend that February is closed. Like, let's pretend right now it's closed. I have no bias. We're stuck straight in the middle. So I will take this. If it breaks to the upside, I'll take it. If it breaks to the downside, I'll take it, because we have to get out of this big mother bar. We have to get out of January's range some way or another. So that going forward, that's what I would be looking for. And whatever, whatever direction the market chooses to go is the direction that I will play. And I also wanted to touch a little bit on watch lists and how I, pick my setups and do this and that. The first thing that I want to say is being able to play both ways, long and short, that right there alone doubles your setups. So you don't need to have a great big giant list. In fact, I discourage that. I have, how many is in here? I have 65 tickers that I watch. And these are just things that I'm comfortable with. Some I don't even play anymore, but I do like to watch them, like CGC. I don't like to play sub $20 names, but I like to chart them and, play with them and look at them. But I stick to what I know. I'm not searching for, the biggest mover in pre-market. I don't care, because I can't do homework the night before. So even, for instance, yesterday, I posted to the Discord that I play around in. I said, the only setup I'm watching is Facebook. And that was the only setup. And that's all you need. You only need one good trade a day, one good trade a week. Information overload is a terrible, terrible thing. And trying to always find something new, you're going to be uncomfortable all the time.
Perfect. And as you're going through this universe list, how do you then decide that Facebook is the only stock you're watching that next day? And if you see many potential 2-2 reversals or whatever the setup is, how do you select which one to focus on the next day?
That is a good question. And I do it by using multiple time frame analysis. So if let's say it's Wednesday night, and I'm going through my list. If we are still an inside week, I might not even look at the daily. So I might just remove that, because I'm like, we're already halfway through the week. It's stuck. It's not going anywhere. I'm just going to skip it. And kind of, just through time and learning, I can just quickly flip through this and know what I want to take. Like, I knew yesterday I didn't want to take Apple today because it would have been a 2 down continuation. And I don't take continuations. So I'm always looking for reversals. Airbnb, that's just, I wouldn't have played it. I don't like it. Did AFRM take out our new all-time low yet? Yes, it did. That was the target, guys. A new all-time low at 46.50. It did it today. Yay. Now you can look for a reversal back up because it's exhausted. We're not going to talk about AMC. The apes are mad at me. I had a short trigger, but it didn't trigger. That was the entry, was 14.65, but it did not trigger. It exactly held. But it's okay. So just, learning time, playing with full time frame continuity. If you have a reversal setting up on the weekly and on the daily, and you have full time frame continuity, take the trade. You're never going to pick the best ones. Sometimes I will have, and I try to limit them to my favorite 5, and that just takes time. I'll just keep looking, and I'm like, what's, and I'll get my little measuring tool. I'm like, what do I stand to gain? And then I can whittle it down that way too. But limiting your watch list, I would say, is has been a huge thing for me.
Yeah. And you've mentioned several times full time frame continuity, and I know we went into that in the previous video, but for people who haven't watched that one, could you kind of explain what that is and how you incorporate it into, you know, choosing setups and deciding which trades to take?
Yep. Okay, so full time frame continuity is having as many time frames in your favor as possible. There is indicators you can get. TrendSpider has it built in. TradingView, there's scripts. But do you see how it's showing you that the year, the quarter, the month, the week are all red?
Yeah.
So that just means that the candle, so the monthly candle from its open is lower than the open. So the candle's going to be red. So if Facebook was up here, it would be green because it's higher than its open. So we use candlesticks are relative to open versus close. So where it opened versus where it is now, not compared to the previous candle, because I know that that's a different candle setting. So we use open till current. Mm-hmm. So yesterday, the only reason I wanted to play Facebook was because we have full time frame continuity to the downside. So I know that the sellers are here. I have the weekly people on my side. I have the monthly people. And now if this triggers, I'm going to have the day traders on my side. So this is a high probability setup because yes, you know, we took this long on Wednesday, but it was just a little dead cat bounce, whatever. It failed. We're going back down. You know, it's as simple as that. And we aren't going back down until we go down. So until we break the previous day's low. If you just think about it in simple terms like that, it'll keep you out of entering positions early, long or short. You know, you can't go up until you go up. You can't go down until you go down. You're going to see it happen. And then I would also like to show on a 15-minute chart, there's more than one way that you can do this. Okay, so we know that this is our daily. Let's get rid of the red. And let's add that 220 target. Okay, so this was the setup, okay? My white is my entry, my green are my targets, and I always talk about psychological levels. If you're in the hundreds, it's increments of every $5. So 225, 220, 215. So let's go to the 15-minute time frame and see what happened. Also, I do not use extended hours trading. I only care about real-time trading. Okay, so the day opens right here. We gap up a little bit. I already know because I did my homework the night before, I am short biased Facebook. Mm-hmm. Full time frame continuity to the downside. We're closer to taking out yesterday's low. So here you go. You could do so many different things on so many different time frames, whatever you're comfortable with. So the day opens here as a 2 up. Right here, not there. Right here is your 2 up, 2 down reversal. If that works, will that trigger my daily 2 up, 2 down reversal? It's the same exact thing. What you're looking at on the 15-minute is exactly what I wanted to see on the day. So you can take it early because we're always forward thinking. If this, then that. So if this 15-minute candle works, is it going to trigger the daily 2-2? Yes, it did. Okay. If you're more cautious of a trader and you want to wait for the daily break, that's fine. Wait for the break, wait for corrective activity, then get in. So had you done that and used the 15-minute time frame, your corrective activity would not have happened until this failed 2 went 3. So you're going to enter right here at 225. You're going to put your stop right here at the top because you know, you're right. You're playing in the direction that the chart's going. You know your targets, your stop. So it just gives you so much confidence.
Mm-hmm.
And then again, multiple time frame analysis, whittle it down. You can go to a 5 minute, you can go to a 60 minute, whatever you want. You know, we have traders who trade on a 7 second chart. We have traders who trade on quarterly charts. It works for every time frame. So this was just an awesome example. And there was so many entries too. You could have gotten in here on the 2-1-2 back down. You could have gotten in again here on the 2 up, 2 down. You know, wait for corrective activity, then smash it. Target 1 was hit, 220 psychological, the day ends.
Perfect. And in this case, how are you managing your stop throughout the day as you continue to make progress for you?
Walk it down, put them at the little corrective activity pops.
Mm-hmm.
You know, but see, usually the targets will get hit before you even have to move your stop. And that's the amazing thing about putting yourself in a winning position right away. Mm-hmm. Your stops usually don't even have to move very much because you know you're so confident where your target's going to go. But if it doesn't, for whatever reason, you're being protective. Some people walk it down just on the highs of every candle, but they're going to get stopped out on a little bear flag doing that. So, right. You know, you got to be mindful. You have to know what a downtrend is. Like, you don't want to suffocate your stops. You're already in a winning position. You're already at a risk-free trade. Just let it breathe.
Yeah, you don't want to choke off the trade early.
Right. And you're already risk-free from the jump. So chill out. You know, let it hit your targets.
Yeah. And I know you mentioned you can use this on any time frame, but you personally, what do you like best to execute on during the day?
The 15.
The 15.
Yeah.
Yeah. And is that what you're watching to enter the trade as well?
That's what I'm executing. I'm watching all the time frames.
Yeah.
But I prefer to execute on the 15.
Perfect. And you mentioned a term that people who aren't familiar with the Strat methodology might not be familiar with, and that's exhaustion a while back. I'd love to hear you explain that concept a little bit because I think it's definitely an important one.
Okay. I've got a great example. So what is exhaustion? It means you have made a new lower low or taken out a huge pivot. Because again, back to the bottom fishing thing, you don't want to bottom fish because most of the time that low is going to be taken out. So it's safer to say that, you know, support is a range, but we like to say it's diagonal. You know, it's not horizontal, it's diagonal. So this is the monthly candle of Celsius. We took out this pivot low, and right then and there, I was like, look for a reversal. Look for a reversal where? Go down to a smaller time frame. This is the weekly. Your reversal was picture perfect. You had a 2 down. It took out all these pivots. This was your last one anywhere nearby. Then you had a 2 down, 2 up reversal. So you would have wanted to enter long at 47.38. Originally, your stop would be here. I always tell people the same candle you enter on is the same candle your stop's on. But that's just an original stop. We move our stops. And then target 1, target 2. And then you can keep walking it up. I mean, the daily gave awesome entries too. You had corrective activity. You had a daily 2 down, 2 up. You could have entered right here. That is still your target. It's a daily pivot high, but it's the weekly candles high. It all correlates. You had a this candle right here, this 3. This was the perfect exhaustion candle. You know, you made a new low compared to this low. You made a new low compared to that day. And then they were done. They're like, all right, let's buy it. And then straight up, pull back, corrective activity, enter. Now here. Now you're going to move your stop because you're green, you're going, move it there. Keep moving it up. Your target was hit. Get out if you want. Get fully out. Now you have a 2-1 set up. If you get a 2-1-2 tomorrow, keep going. Get back in. Stop there. You know, I mean, it just never ends. And you can go down to a 4-hour chart, a 1-hour chart. But still, I would prefer it if you have a daily reversal in your favor. And I wouldn't be going and entering here or here or here because there's not been any corrective activity or pullback. You're going into exhaustion, basically, short-term exhaustion. So that's why we say wait for corrective activity. This right here re-triggered that 2 down, 2 up week. And since the exhaustion level right around here, Celsius has ran 48%. So it took out that monthly pivot low and ran 48%. So that's what I talk about when I mean exhaustion. Have you made a new low? Have you, if you were playing short, did you hit all your targets? And there's no targets left. So your targets are exhausted if you were playing to the short side. So now you flip, you go long. I mean, you can play the same stock long and short, just that one stock all the time if you want.
Right. And exhaustion can happen to the upside as well as a stock makes new highs.
Yep. Yep. Right here. Boom. And that's also the top of our broadening formation.
Right.
I mean, it happens to SPY every month for the past, make a new high, fall.
Right. And Sarah, something we haven't really talked about is kind of the money management side of things, like your position size, how much you're risking on any given trade, and how many positions you're willing to hold at the same time. So yeah, I'd love to hear, first of all, kind of how you decide your position size for any given trade that you take.
So my position size is based on a dollar amount. So I will go into a trade. It's a bit easier with options, I feel like, because I know exactly what I'm risking based on the option price, and I don't have to calculate how many shares I'm buying. But yeah, I base mine solely on dollar. So say I'm only willing to risk, $300 per trade or whatever percent. I mean, me personally, if I lose $300, that's like my max loss and I'm done. I won't trade anymore. But that is, risk management is everything. When I first got into trading, if not for my extreme, frugality and having zero tolerance for losing money, I would not be here. The first year and a half was literally me trying to hold my head above water, not lose money. And I didn't lose any money, but I also wasn't making any money. But that gave me time. It gave me time to find Rob, find the strat, find what I was doing wrong. So staying in the game, learning, practicing, asking questions, and I've been trading only full time since Q4 of 2018. So only been trading all of 2019, 2021. 2019 was me learning the strat all year long. It took me a long, long time to learn the strat, but once I did, and started teaching it, I got much better.
Perfect. And how many positions are you willing to have on at any given time? And does your total risk never exceed that $300 level if you've got more than one position on?
That's a good question. I am not a good multi
Tasker. Yeah.
directional person. The most I can handle at one time is 2 trades,
Hmm.
especially if they're day trades. I guess I'm kind of a high anxiety person, and it just like freaks me out to have too much going on at once. But no, so 300 would be per trade. You know, that's the most that I would ever risk.
Right.
And
And yeah, keep going.
oh, one thing else I wanted to talk about targets and knowing what your targets is, and if you are an options trader or if you have a smaller account, is knowing what our targets are allows you to buy more out of the money contracts, because if you're right, you know that it's going there.
Hmm.
So that's kind of a fun little, I don't know, hack, or buy between your entry and your target. So by the time it hits your target, you're well in the money.
Right. And Sarah, given that you do teach the strat and you've got a lot of experience talking with new traders or maybe learning this methodology, what are some common mistakes that a lot of people make when they're first learning this and trying to implement the system?
People get really confused on twos,
Hmm.
like this candle, for example. It's a two up, but it's red.
Right.
So that for some reason that really confuses a lot of people. Um, or let's see, I see a lot of people trying to enter on bodies and not wicks. Um, full time frame continuity is also confuses a lot of people, and I think most of it is just human nature is to overcomplicate things, and they just don't understand why. Why is it red but it's up? Well,
Hmm.
it's red and it's up because it's below its opening. So that confuses people, and I almost want to start telling people, just take the color off your charts, then just focus on the direction of the twos.
Right.
Also, people want to learn all the setups all at once, and you don't need to do that. Learn what a 2-1-2 is first, practice that, perfect that. Going back through your trades at night, if you missed like the Tesla or the Facebook trade today, go look at it on a smaller time frame and see where you could have gotten in. Study, definitely study every night. Look through your names, what worked, what didn't, why. Oh, PayPal was a good example of the same setup as Facebook, but it
Hmm.
failed the first day, and
Hmm.
then we went short the next day. So we were trying to go long, but it wasn't ready. Oh, it hit both of my exhaustion levels today. I didn't notice. So this was the same day that Facebook blew up, and it had hit one of my exhaustion levels. So this was also on the trade, but
Hmm.
this one triggered and didn't go anywhere. So I told people right then and there, after like an hour, I go, cut it. Because Facebook was already up like 3%. This wasn't moving. So I said, cut it. And then I went on a YouTube live and I go, the only setup, if you want to take PayPal short tomorrow, go ahead. So it was this day. So you could have played the 50% rule. And then it hit both of these targets at 115. I told people we were going to go to 115 because that was the next daily pivot low from 428. And that's exactly where we hit today. So knowing your targets, if you were in this and didn't have any other price action around you, you would have no idea where to exit. You've got to look back, you've got to go back in time, get levels. So that was also a weekly candles low.
Hmm.
So, I mean, you could have got it from the weekly or the daily, and then you're just going to keep going down. That'll be your next one if it keeps going.
Hmm. So it sounds like from what you said there that if a setup triggers but it doesn't just push right away and immediately get you at a profit. You're pretty, I guess, you're pretty quick to cut that because it's not making progress for you.
Yeah, but I'll show you why.
Yeah.
So I said go long above 123, and then your target would have been the top of this candle, 129. But let's go into the hourly. All right, so it triggered on this candle at 10:30.
Mm-hmm.
So you could have gotten in right there, but it fell instantly. And then we had a candle flip, new candle opened, buying. So that's all good. You have a 2-1 setup. But the moment that we broke above this trigger on this hour, and then we had a candle flip, and then you went back below, and then you had a 2-1-2 reversal, you needed to be out. And that's when I told people to get out. I said right here, even though it went back up a little bit the next day, we don't care about the next day. We don't know what's going to happen the next day.
Exactly.
But I said, so the trigger was at 123.33. I told people to exit at 122.70. So that's tiny risk. You know what I mean? So here, 0.49%. But we know what reversals look like. So this could have easily just fell apart and came back down, took out the pivot low, which it ended up doing the next day, and then hit the 116. So just being protective, knowing what the strat reversals look like. Now, had you got, this is a rev strat, so an inside bar, a 2 down, had you gotten a 2 up, I would have told people to re-enter that because you had corrective activity. It re-triggered the day, but it's not what you got. So you had no reason to get back in it, if that makes sense.
Perfect. And I think we've covered a lot, especially when it comes to the charting. And I'm sure a lot of people found this extremely beneficial, Sarah. So I just kind of want to ask you, what are some great resources for people who are new to the strat, who want to learn more? Obviously, your YouTube channel, your Twitter page will be linked down below. But what else can people use to learn more about this methodology?
Yeah, so again, the creator is Rob Smith. So he's on Twitter. He's at Rob in the Black, and he's how I learned the strat. My Twitter page, you know, I've got my YouTube channel right here, which I also just revamped. So I've broken it down into playlists. So there's actually a Stratucation playlist now. So that's fun. Alex Options, he's also a really good teacher. Cyberdog 2, which is Strat Soldier. He's also a very good strat teacher. And yeah, I mean, catch us on Twitter. It's where we all like to play and ask and answer questions and help when we can.
Perfect. And Sarah, do you have any kind of other general advice for anybody new to trading who has maybe gotten discouraged over the past few weeks, this year, which has been tough for a lot of people? What kind of general advice do you have for anybody just starting out?
I would say if you're feeling frustrated and upset, definitely stop trading. Don't anger give away the market, your money back. You guys can hit me up anytime if you have any questions. And just never stop trying. You know, many times I got so discouraged and so upset and would cry, and just if this is what you want to do and this is your passion, just keep pushing. Never give up. Again, the strat community, we love to help people. I mean, that's what we're out here doing literally all the time. So if you're struggling, please hit me up, tag me, tag the strat hashtag. You know, we've got hundreds of people who can help. So just reach out. Stop trading. Don't give away all your money. You got to have the money to continue, you know, the game.
Perfect. Well, Sarah, I want to thank you one more time for your time. I found this really helpful, and I think it's beneficial for everybody to learn as many kind of different styles, find what works for them, and I think the strat is definitely a really interesting way to interpret price action. So for everybody watching, I hope you enjoyed as well. Let us know what you think down below in the comment section. Go ahead and subscribe to the channel if you haven't already. And go ahead and visit Sarah's links down below in the description. Now with that, thanks so much for watching. I'll see you guys in future videos. Thanks.